Hello traders, this is MsPutOptions and I can be reached at www.MsPutOptions.com, and today we're going to be talking about how to place an earnings trade. I'm not going to be giving you all my secrets away, but I'll give you a couple of little secrets. Now, Google this week has done a stock split, so I believe on the 16th the earnings are going to be on this ticker symbol of Google, because Google now has two ticker symbols. So it's GOOGL that's going to have the earnings call on the 16th. As you can see, that is Google. But the other ticker symbol for Google is GOOG, and I don't think they're the ones that's going to have the earnings call. There are different classes now of Google, which is kind of mind-boggling to new traders, and it's kind of mind-boggling to myself too. It's kind of hard to understand and comprehend. So basically this is called a iron condor. I do an iron condor and I customize it and I put some wings on it. So basically these are the number of contracts. This is Google, GOOGL, and as you can see, this is hypothetical. Because this particular trade expires in 6 days, and 6 plus, we said today was the 5th, will be the 10th. So this cannot be right what I'm showing you here. This is just an example because the earnings doesn't come out until the 16th, so you have to wait around that time in order to place your trade. So remember, this is the 6 days until this expires, and today is the 5th, so that's the 6 plus 5 is 11. So this is all hypothetical, but this can really happen to you. So you can see our strike prices here. You can see how many calls we have. You can see how many puts we have. And you can see that it is a debit of $4.60. Now, a lot of people are going to say $4.60, MsPutOptions. Who wants to do that? Let me finish with the math and I'm going to show you who wants to do that. First, let's look at the chart of GOOGL, which is Google. And as you can see, it is rising beautifully. It's going up quite nicely. So this is going to be a beautiful trade. Unfortunately, I am on vacation and I will be on flight. And I'll tell you the truth, I really want to cancel my flight in order to place this trade. But unfortunately, I cannot do that, but I wish I could, because it's going to be some serious money to be made here with Google on this earnings seasons here that's going to happen on 4/16/2014. So I can't cancel the flight. I wish you guys luck if you're able to figure out the rest of this trade. I'm not going to give all my secrets away. So let's downsize this and see what really happens. Like I said, this is an earnings trade. This is an iron condor with wings. I customize it, as you can see here in the corner. We already talked about what I buy, what I sell, how many contracts. We're talking about Google, GOOGL. And we already know this is hypothetical because this actually happens. The earnings happens on the 16th. And we said this expires in exactly 6 days. And if today is the 5th, 6 plus 5 is 11. So this is very, very hypothetical, and the market is not open. Today is Saturday. We see how many calls, we see how many puts, and we see it's a debit. And MsPutOptions, who wants to do a debit? I'm going to tell you who wants to do a debit. MsPutOptions wants to do a debit because you're going to get $4.60 worth of debit. But let's finish up with the math here. First of all, we have a $5 spread, meaning the difference between our strike prices is $5. So we take the $5 and we subtract it by our debit. Our debit is $4.60, which, as you can see, is $4.60. Now, we're kind of frowning upon this debit, but let's finish the math. The difference between our strike prices is $5. And we had to pay up front $4.60 debit, And the difference between our $5 spread and our $4.60 debit is exactly 40 cents. Okay, and because $6 and I'm sorry, $4.60 plus 40 cents is going to give us $5. And we would times that by the number of contracts, which we have 10 contracts here, times 100 shares, and our gain will be 400 big dollars. 400 big dollars. Now you're going to ask me, how long is this going to take for me to gain $400, 400 big ones? And the answer is, it's going to take you anywhere between 1 to 5 days in order to profit, depending upon when you're able to close out your trade. Now, this is the reason why MsPutOptions cannot be on a flight and trying to place this trade at the same time, because as we all know, the internet doesn't work very well on the airplane. This is not a recommendation, but this is how you do a earnings call. An earnings trade. Iron Condor with wings, and this is customized. So by you collecting, or shall I say, by you debiting out $4.60, you are increasing your chances of getting 40 cents times 10 contracts times 100 shares, and that'll be for a $400 gain. Anywhere between 1 to 5 days you can profit, depending upon when you're able to close the trade out. So I think this trade will be very, very successful, and this is how you do earnings trades. Please stay away from low dollar stocks. If you never listen to anything MsPutOptions ever tells you, please, when you're doing earnings trades or when you're trading, period, please try to stay away from low dollar stocks. So this is the Iron Condor with wings, and it's customized. And this is MsPutOptions. You can visit me at www.MsPutOptions.com. There's my website there at the bottom where I have webinars. And I would like for you first to be a beginner student before I show you how to do the Iron Condor, because you really won't understand and you'll probably get a little confused on when to get in or when to get out. But good luck to you, and I hope to see you soon. Again, this is www.MsPutOptions.com. Come by and visit my website. I must say, though, first, before I leave you, that my website works best. Again, it works best on Internet Explorer, not Google Chrome. So when you try to log into my website, please use the Internet Explorer. All right, you have a good day now.